If you want to trade successfully, that is profitably, you have to trade first of all. Whether in the end you make profit or not, or I make profit or not, is based on a simple mathematics, that is based on success rate and reward risk ratio and how many trades you are taking in a period like a month or a year. How many trades you take in a year is more or less in your control. Reward risk ratio can be a conservative one, let's say 1:1. What then remains is to have high enough success rate. Even if you have 60% success rate, then you can get quite reasonable profit at the end of the year on total equity. Whether you can get 60% success rate or more is dependent on whether you are taking truly high probability trades. And I try to take those trades and share those trades week after week, month after month, and year after year on these videos as well as on my X handle Superior Profit and on my website superiorprofit.co. These are truly high probability trades because I find them by combining technical analysis with not only market direction analysis but also my preferred trading direction decision, further align sector industry scorecard, fundamental scorecard, and sometimes even seasonality scorecard with my trades. In recent weeks, I shared one seasonality based trade that went into profit. It was closed profitably. Then last week, I shared another trade that was a high growth stock with a nice valuation, an airline stock. I'll review that trade this week. That also could be closed with a profit. I did close that with a profit, but I'll explain how I managed that trade. And this week again, I'm going to share at least one trading idea based on what I call this 360 degrees analysis. Greetings, I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA as well as India markets using Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades, just like only I am responsible for the outcome of my trades. Options trading can be risky. It does not have to be risky, but it can be. You may refer to the characteristics and risk of standardized options document from OCC to decide if options trading is suitable for you. And you may learn further, maybe from my videos, from the material on my YouTube channel, on my Twitter feed, how to use options without using the risks inherent in them. I developed Q systems, and that is the only system I use to decide my trades. Q has multiple components. All the components run on the Metastock platform, and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with a look at the live system. First, let me have a look at the stock that I shared in the previous market roundup 1 week ago. That was United Airlines. I analyzed it on this day, that was Friday 1 week ago. I did not take it on Friday, but on Monday, using real-time fine-tune chart, I had taken a long position. As it went up, it covered more than risk distance. Now, why did I share it 1 week ago? You may watch the YouTube video. It is still there. All the videos are always there on the YouTube channel, but let's look back on United Airlines with the chart template that has the historical trend lines, including the ones that are broken now. This was Friday 1 week ago. I looked at different airline stocks and I chose this one because it had strong fundamentals. It was in a strong industry at that time, and I suggested that it could be bought on Monday if it was breaking above this trendline resistance. That is what I analyzed on Friday. On Monday, it indeed broke out above the trendline resistance, and I took a long position using real-time precision entry chart. Where would be the stop for my position? In this case, it was a breakout setup, and the recent swing low was quite far away for my liking, and the breakout did not happen with a gap. So I did not have the possibility to place stop using daily interval. That would be too far away. If it was a gap up day, I could place stop below the low of the gap day, but it did not have a gap up day. So a logical stop would be below recent swing low using daily interval. That would be too far for my liking. Because I entered it using real-time chart, I could place stop using real-time chart as well. And once that distance was covered, the risk taken in the trade, partial position could be closed, and I did the same. On Friday, it gapped down. I was still having partial position open. The gap down happened because of earnings announcement of another peer stock, not of United Airlines, UAL. This stock is UAL. UAL has not declared earnings yet, but Delta Airlines did, and Delta's stock fell down. That brought down, I think, all the airline stocks on Friday. UAL was one of them. When it gapped down at the open, it was still slightly above my entry price on Monday, and you could, as I did, close the remaining position also with a very small profit. Overall, the trade made a profit in spite of a huge gap down open on Friday, and then it closed further down. Closing the remaining position was a good idea, and that would be the Q guidelines to close partial profit once the risk distance is covered, and then use a trailing stop. The trailing stop would be hit at the open on Friday. This was once again a trade that was closed with a profit. I will share at least one more trade idea for this week, but this is how I managed UAL, and we may revisit UAL again later. But let's start with the market level analysis. What is the objective of the market level analysis? To assess two things. One is what is the market direction, and then what is the preferred trading direction. Let's start with dollar index first. When dollar index was falling here, in fact from here I was bearish, and I published that in my YouTube videos. When dollar index came near this long term weekly trend line support, I mentioned that it would not be easy for dollar index to simply pierce through the trend line support in the longer term interval, and it indeed stopped right at the trend line support, created a false downside breakout here, and since then it is holding above the weekly trend line support. And then when price came near this daily trend line resistance, I was watching for it to stop going up, and indeed it stopped there. These trend lines, automatically drawn smart trend lines called memory lines, they come from the past, come from somebody's memory, as if they work very well. In the last market roundup, and I have a habit of reviewing what I shared in the previous roundup to see and to show how the analysis is working out. In the last market roundup, I mentioned based on this day's candle, that was last Friday's candle, that dollar index could go either way because it stopped at trendline resistance with an indecision shape candle. And this week it did not go anywhere, just moved sideways. If we clear the charts and look at the weekly interval, it is a doji candle. Interestingly, now we have one and then another bullish indecision candle in weekly, that is creating an indecision cluster at the bottom where we have a trend line support. Looking at that, I am slightly more bullish than bearish in dollar index, and I will be confirmed bullish for short-term trading. All my analysis is for short-term trading if this trend line resistance is broken on Monday. If it is broken on Monday, then dollar is going to go up. That will give a breakout long setup on dollar, and that may put pressure on the stock market. So if that breakout to the upside happens next week, Monday is a trading holiday in the USA. If that breakout happens next week to the upside, that may be putting bearish pressure on the market. You may keep an eye on that. I will certainly keep an eye on that. Let's look at the global markets, but I want to do that relatively quickly. I always say that, but I end up explaining the technicals in detail so that people can learn from that. Doesn't matter which country, which market it is, so long as it is a liquid instrument, it is useful to practice the technical analysis using the instrument. This is all ordinaries index, Australian market. What is the direction? It is in an uptrend. What is my preferred trading direction? None. In the weekly, it is stalling after creating a false upside breakout, displayed a bear release signal and then a bearish indecision. The weekly color is also indecisive. Daily is in an uptrend but not at a point where I would like to buy. Weekly daily together is telling me to stand aside, and it is also showing the pattern that has worked well in the past in capturing the top or near the top. Jump thrust high, price extreme high, came a big move down 3. More often than not, it leads to a down move. So I am not going to be an eager buyer in the Australian market. I am not going to short also because there is a trend line support nearby and there is no short setup. I'll stand aside. See, I told you I end up with detailed analysis sharing, because the same analysis can be applied to any market, any index, any stock, future. It is good practice for me and for you both. Topics index. What is the direction? Clearly bullish in weekly, daily. It is too overbought, and I'm pointing to all these colors and lines. If you are familiar with Q systems, you know what they are. If you don't know, you may go to my website superiorprofit.co, then learn page, and all the detail are available there. It is clearly bullish but overbought. I'm not going to buy, I'm not going to short. What was the last time we could buy looking back? You could buy using this bullish flow day that came after a pullback. Price went up again from the yellow direction line. That could be considered a pullback setup, and you could look for fundamentally strong stocks in strong industries that were giving buy setups at that time. I prefer to buy those stocks than the index itself. As the index went up strongly, the stronger stocks would have gone up even more, giving a sizable profit in those trades. But that was the point to buy. All my buy decisions are made at a swing low or near swing low, except a breakout trade. And I explained in case of UAL how I take breakout trades if I take them. Let's look at China market, CSI 300. China market is at a very low price level near jump thrust low, price extreme low. It has already given big move up 3. And I explained earlier, I am looking to have a buy setup in the China market. I did buy some stocks here, some Chinese stocks listed in the USA market. I closed them with a profit, looking at the overall weakness of the USA market, and the stocks might have come down again. Now, if I look at this daily chart, it is stopping at the watermark support where a cluster of bullish headwinds had come earlier. We have a series of indecisive candles last week, including an indecision cluster and a bull release signal. What we need now, I need at least, for price to go above the high of these last 3 or 4 days. If that happens, then price will be going up after indecision cluster, bullish cluster, and after this pattern of jump thrust low, price extreme low, and big move up 3. If that narrow range breakout happens, I may again look for buy setups in individual stocks. That is what I am reading from the daily chart. However, I am also seeing the weekly color and shape both are bearish, and the trend line support is some distance away. So if price continues to go down, I wouldn't mind actually. I would prefer, because if I'm buying stocks and I am on the cash, I am not in a hurry to buy stocks. If the market keeps on falling down, I will wait to see if it is stopping at the next trend line support, or maybe watermark support. In this case, trend line support in the longer term weekly interval. If it comes there and stops and starts to go up, either creating a straightforward bounce or creating, even better, a false downside breakout, that will be the point I will be even more happy to buy than buying now if last couple of days high is taken out, because then I will be using a longer term trend line support, and this memory supports work very well. In either case, I am not going to take short trades in China market now. It is too low and the pattern is more favorable to take long trades provided it plays out the way I explained. FTSE index UK market. Daily trend is in an uptrend, but last couple of days color is red bearish. Weekly is indecisive, created a stop right at the watermark resistance there. There are multiple trend line supports. Currently I have no preferred trading direction, but it is in an uptrend. If it comes to the trend line support and goes up from there, I'm going to look for buy setups from there. And lastly, India's Nifty 50 index. Very strong market, strongest of all the markets we study, created another new all-time high. However, it is at a very high price level. It is difficult for me to buy in this market, and even if I buy, I'll be extremely careful. And with the Indian traders, I shared a trade idea last week that was profitable trade, and let me explain how I found the stock. It was in a stock that is quite well known. It is one of the large cap stocks listed in the USA market also. That was Infosys. The ticker in the USA market is INFI, INFY. I noticed INFI on this day, Thursday, in the USA market. It is an Indian company that is listed in India as well as in the USA. The earnings was announced after Thursday's market close in India, that is before Thursday's market open in the USA. And as you can see, the earnings was liked by the big traders. It opened with a gap up, then closed higher. Yes, it had a long upper tail, but with such a huge gap up and the fact that it is actually listed in India, that was not a bearish sign. It was certainly a bullish sign. Now earnings was already out, so I looked at this pattern and noticed just the day before it had a down day. So many people sold and they might be caught off guard. So I shared this with the Indian traders, and it could be traded the next day in the Indian market easily using real-time chart. Let's look at the Indian ticker, that is INFI.NS, NS for National Stock Exchange of India. See what happened on Friday. So earnings was out after Thursday's market close in India. That earnings was very bullish. We could see that from the USA market. So we could wait to see if we could have an entry point on Friday in the Indian market. It indeed gave a huge gap up open. So it gave a gap long trade setup, and then the guideline is to switch to intraday chart. Let's do that. And in the morning session, use the 5-minute interval. Five-minute interval Infosys in the Indian market. On Friday, it gapped up, created the early range high and early range low. Our preferred trading direction was bullish. It went above early range high. That was the point we could take a long position, placing stop below early range low. Never came down. At the high of the day, it covered more than the risk taken in the trade and profit could be booked. That was an easy trade using real-time intraday chart, and the technique that I explained just now for Infosys in India market using the precision entry intraday pivot chart, the exact same template could be used, and I use that in the United Airlines in the USA market. I explained how I identified United Airlines Friday 1 week ago and I entered it the next Monday, that was using the same intraday precision entry template. So Infosys was a profitable trade. It was a trade based on publicly available information and the fact that it is listed in both USA and India markets. We could have some advanced insight in how the stock might move in India when Friday market opened there. But if I don't look at specific cases like that, let's go back to the Indian market again. NSEI. It is very overbought to keep on buying stocks, and it has also shown a pattern that is not very friendly. Of course, there is no short signal at all. So if you or I are holding long positions taken earlier, we could continue to hold them with trailing stop. There is no short setup, and individual stocks may give buy setups. But overall at market level, I am not going to buy, though the market is very bullish. Now let's look at the USA market. USA market showed a mixed picture. Let's start with SPY, and as we progress in our market level analysis, you will see exactly why the mixed picture appeared. This is SPY, very strong wick that took the ETF to the previous high, probably all-time high also, and both on Thursday and Friday failed to close above the watermark resistance, instead pulled back, creating a false upside breakout. However, this false upside breakout is not bearish because the color is still bullish and the candle shapes are either bullish on Thursday or neutral shape on Friday. So yes, it has a false upside breakout, but that is not bearish enough to take a short trade. And on top of that, there is a trend line support nearby that would also prevent us, or me at least, taking any short trade in SPY as such. But it stopped where we would expect it to stop after making a very bullish move. What about QQQ? Again, very strong bullish move, little bit shy of the previous high, didn't hit that watermark resistance yet. And markets have a tendency to take out previous swing highs or all-time highs or 52-week highs if they reach so close to that high. Looking at that, I would think that QQQ will go up further to at least take out this high. After that, what will happen, we'll see, but it is likely it will go up. But it is already too far from the recent swing low. What did happen in the previous swing low, that is in the previous market roundup? Many people were actually bearish when we were here, right here, previous Friday. But I clearly mentioned in the previous market roundup that if anything, I was going to look for buying if the two candles, that is Thursday, Friday 1 week ago, that had a bearish sorry, not bearish, bullish indecision cluster, if that high was taken out, which was taken out right on Monday, and QQQ continued to go up. Incidentally, QQQ was the only market ETF that had this bearish indecision cluster 1 week ago. My last week's analysis was once again perfect and profitable in terms of deciding preferred trading direction. So I was a buyer at the swing low. I am not going to buy now. That is how, using Q guidelines, people tend to be little bit ahead of others while taking only low risk trades and taking trades with proper trade setups. So I would not buy on Friday 1 week ago, but as I explained in that market roundup, if these highs were taken out, that would be the point to buy. In fact, when that high was taken out, that was probably the time when United Airlines was also breaking out from trendline resistance. Everything came together. SPY and QQQ went up sizably. What about DIA? DIA also went up. We can see that from the weekly activity bar being green. However, not as bullishly as SPY QQQ. The candle shape is also indecisive. And in the daily, we can see it is moving inside a narrow range created by watermark resistance and trendline support. Relative performance is showing it is it is underperforming the market. Relative performance tilting down, underperforming the market. DIA is one of the two ETFs that showed the pattern that comes near the high, that is jump thrust high, price extreme high, came a big move down 3. Since then, I am waiting for it to at least take out the low of that candle. That has not happened yet. This pattern has a very high success rate for 360 degrees stock trades, and I explained this pattern in DIA right when it happened. Since then I am cautious in DIA. We'll see if the pattern works out in this ETF also, but because that pattern has come and this low has not been taken out yet, I am not going to buy industrial stocks right now. IWM is another ETF that showed the same pattern. Jump thrust high, price extreme high, came big move down 3 on this day, and that low has comfortably been taken out. So I am waiting to see if the same thing happens in DIA. IWM is also the only market ETF, the small cap ETF, that is down for the week. However, it is also the one with bullish indecision cluster 3 days in a row last week. So I am not going to short now. Of course, I am not going to also short because a trend line support is not far from current price. The ascending yellow direction line is not far from current price. I'll be bearish again in IWM if this trend line support is broken, which will mean the yellow direction line is also broken. For now, I'm going to be indecisive on IWM, that is stand aside, decisively stand aside, looking at weekly, daily and the indecision cluster. We have a mixed picture. Now note that IWM and DIA are not influenced by mega caps, whereas SPY is and QQQ is influenced even more. How did the mega caps do? That will probably explain why we are seeing the divergence between the market ETFs. Let's look at the mega cap tech index. That is a custom index in Q Global Market Breadth. the weekly picture is very bullish, very similar to SPY and QQQ, and that probably largely explains why SPY QQQ did much better than DIA, certainly much better than IWM. Now look at the Megacap Custom Tech Index in the daily interval. As of Friday, 1 week ago, it showed an indecision cluster bullish side 3 days in a row. That was the same time when QQQ showed it for 2 days in a row. So we could also anticipate a move up, and if that up move happened above the high of these 3 candles, we could be a buyer at that point. It indeed take out the high and went up. Now is not a time to buy in my view. We are, at least I again, Q traders tend to buy at swing low using 360 degrees analysis because it is proven that those trades have higher probability of success. That is how I decided to be a buyer of stocks 1 week ago. This week I can still buy some stocks. I will share what kind of stocks I may consider buying. I am already holding one long position. I'll explain how I took that. But before that, let's look at the other market aspects. So far, the external view is bullish but not at a low enough, not a swing low point to buy. Mega caps are also telling us not to buy at this point. Let's look at the internal health check. Market internal, market breadth chart. Notice one thing, that though price went up for the week, this is an index of indexes, very broad assessment of the market, it went up for the week. If we look at the weekly daily, again the weekly is very similar to SPY, QQQ and Megacap Tech Custom Index, very similar. They are all moving together, and daily has multiple trend line supports. If those supports are broken, and it will not take a lot to break those supports, it is just hugging the support lines by the lows of these days. It will not take much to break the trend line support. If that support is broken, then I may start to, I think I'll quite comfortably start to look for low risk shorting opportunities, but that is not broken yet. In any case, I came here to show also that the weekly index, market breadth index, went up. However, if you notice the breadth indicators, percentage of stocks above 50-day moving average, that is gradually coming down throughout the week. It started coming down after hitting the extreme overbought line. The 3-month new high low also came down after hitting the extreme overbought lines. It is still coming down. So internally, the market breadth is weakening while the index itself went up. What index? This very broad market breadth index, as well as QQQ, SPY, and respective indexes SPX, NDX. That is showing an weakening of breadth, weakening of participation of stocks in the up move, while the market is at or near all-time highs for SPY, QQQ. That is a reason to be cautious. IWM was the worst performer, and if we look at small cap versus large cap, small cap is coming down. If we look at growth versus value, growth was underperforming, but this week growth outperformed. growth is doing better, small cap is doing worse. Not a very friendly picture. It seems the large cap, mega cap growth stocks are holding the market higher. The overall participation in the bullish move is reducing. So none of the external view, internal view, and the mega cap index is telling us to buy, but it is not telling us to short also. Let's look at sector industry stock advanced decline breadth from Q edge. 1 month long term view is very bullish. However, 10-day, also a long term view, immediately turned bearish, bullish to bearish. This week's view, 5-day period, is neutral. 2-day and 1-day turned bearish. Bullish, bearish, neutral, bearish. In some exams, they give a pattern and say what will be the next pattern. Considering the fact that these are of different intervals, monthly, 10 days, 5-day, 2-day, and 1-day, it is possible that it will go down from here. And from a trading perspective, I'll be happier if it goes down from here because it will be easy to find low risk shorting ideas. If it goes up from here, everything is possible. It will be difficult to find low risk buying ideas. That's why as a trader, I will favor market going down from here, and these graphs support that possibility. But I will wait for that to happen and see how things come together. If sector industry stock breadth comes down on Tuesday, Monday is a trading holiday, and it comes down enough, that will probably coincide with the market breadth index breaking the trend line support. That will also give additional confirmation that we can start taking low risk short trades. That is how I get ready for a possibility and wait for that possibility to happen and then take the trade if that indeed happens. Just like I did it in UAL, just like it could be done in Infosys in India. So far, there is no signal to tell us to buy at the market level, but no signal to tell us to short also. Let's look at the technical breadth using Q Finder. Slightly more bearish than bullish, and the bearishness is a lot more in the reversal trades. For a trader, that's good because these are reversals that are happening at a high price level. Market is at a very high point. Not all stocks are at a high point. Energy stocks are doing very poorly, but the market is at a very high point, and then we are seeing more bearish reversals than bullish reversals. For a trader, that may be attractive. It has started to turn down in the technical breadth, and technical breadth tends to give us early warning because it is across thousands of stocks, not only controlled by market cap, certainly not controlled by market cap. These are Q technical setups, not controlled by market caps. QQQ SPY can be controlled by market cap, and that may impact the overall market breadth index, but the technical breadth cannot be controlled by the market cap, and that's why sometimes it may give an early warning of breadth weakening, the bullish participation weakening, and we saw that bullish participation weakening from the percentage of stocks above 50-day moving average and also 3-month new high low as well. That was the weekly technical breadth. And daily on Friday's technical breadth is also quite bearish. In fact, Friday's technical breadth is bearish enough with 6% breakdowns, almost 6% trend following short setups, that it is okay to look for short setups and get ready with them. What kind of setups? Not only technical setups, but technical setups with weak fundamentals, weak industries, and get ready, create a watch list of them. And you can see some of them are at very high price level. Those may give lucrative shorting opportunities. At minimum, if you are holding long stocks with a profit, you may be cautious after looking at these technical breadth charts. So when the market is at so high point, I am cautious about buying, but I also mentioned I bought a stock last week. I think Friday it could be bought. Let me explain what stock was it. That was peak, and when the market is not so bullish in terms of preferred trading direction, it is very bullish in terms of market direction, especially QQQSPY, DIA 2, but my preferred trading direction is not bullish. In that case, I look for high dividend paying stocks, and I found this stock PEAK, peak. It's a healthcare stock. Let's look at the fundamentals first. Let Vital retrieve data from Refinitiv, then we look at the fundamentals using Q scorecard. PEAK, healthcare rate, real estate investment trust. Sorry, not healthcare stock. It's a healthcare rate, but it's a real estate sector stock. Valuation is not great. Earnings growth is not great. However, it has a high dividend yield of 5.7%. And what caught my attention on the day that it caught my attention was that the stock was up when the market was down. I looked at its scorecard and I noticed that insiders are heavily buying. Funds are neutral, but insiders were heavily buying, and it was going up on a market down day. That is one approach I use sometimes. When the market is down, I look for stocks that are up from my list of liquid stocks and see what possible reason could be there for it to go up. One reason could be the dividend yield, one reason could be the insiders buying. So I looked at the technicals, but before that, let's also look at the industry scorecard. Look it up from Q Edge. Very visual system, Q systems. Instantly we see it is one of the top 20% strongest industry of all industries. And also it is a turnaround industry. In terms of 5-day acceleration, it is among top 20%. And we can see also from the color coding, the heat map of the industry scorecard, that it is a turnaround industry. I like to buy turnaround industries just as I like to buy turnaround stocks buy at swing low. And here both of them are coming together. The industry was sizably up in terms of percentage move, 1.2% for industry level move is very strong. So industry was telling go ahead and buy. Turnaround industry, I love them. You know, many people are trend followers. They will wait for a stock to confirm an uptrend and buy here. They will not buy a stock that is reversing from downtrend to uptrend. But those are the points that give the turnaround opportunities, and that same pattern works out in the industry level also, which you can instantly visualize, in fact in real time, using the scorecard. This is a turnaround industry. In terms of stock, I would be buying here. In terms of industry, I would be buying here. What remained was to look at the technical charts. Let's look at that. The charts are so colorful, intuitive, that once you learn them, it is very easy to decide what to do. We already know, you all know already, that these trend lines work very well as resistance and support, and therefore the breaking of them is also significant. In this case, a trend line resistance was broken very decisively by this week's candle of peak, PEAK. Notice, looking back, how beautifully the bullish headwind, the unique reversal signal, caught almost the very bottom of the stock, at which point it also gave a big move up 3 in the weekly interval. In any case, I didn't look at the stock at that time. I looked at it on Thursday. Why Thursday? Because Thursday the market was coming down, but this stock was going up, and it in fact gave a flow trend following long setup. If you look at the chart now, and that is when Thursday actually I took a long position. Friday it gapped up and continued to go up. It is still looking quite bullish. In fact, if you consider that it was indeed moving inside a squeeze, shown by the squeeze signal here, only on Friday it broke out of the squeeze. So using the concept of squeeze breakout in daily, which was accompanied by a trendline resistance breakout in weekly, it could be bought on Friday also. But I took a long position in Thursday. Friday would also be alright. Friday could also be bought based on the gap up move. Let's also look at it using the momentum chart. Not that one. When I bought it on Thursday, I also looked at the momentum chart, additional momentum signals, similar to the signals that are there in HSI. I don't sell them, but if somebody is aware of the signals, I offer them these signals also, charts and also finder, scanner. So if you are a Q trader, you are aware of these signals, you may just write to me. If you are not already having them, I'll add them to your account. What did I see on Thursday? Dr. Jeffrey, who uses similar signals, and I came to learn about them from Dr. Jeffrey's videos, thanks to him. I later on incorporated similar signals on my programs, both TradeStation and Metastock. See what I saw on Thursday. Other than the Q flow trend following setup, that is the setup. I'm looking for a setup to buy. But in addition, it was a bearish day. So I looked at the momentum signals and I saw 1, 2, 3, 4 green signals, or you could say 4 green dots. Yes, one is not dot, it's a bar, but you could consider that as a green also. So 4 green dots, anything above or equal to 3 is significant. We had 4 green dots and it was also in a squeeze. The momentum chart is showing it is still in a squeeze, but actually it has broken out. That was accurately reflected in the Q squeeze calculation. They are different. They complement each other. So that was another reason I was confident enough to buy this stock on Thursday when it was going up. Market was down and it had enough momentum signals as well as a proper Q trade setup, great fundamentals and great industry score on Friday also. It could be bought on Friday also. That is the stock I am holding, at least one stock. I don't announce all my trades. The aim is not to give trade ideas as tips, but to explain a robust technique that I can follow. Now I showed UAL 1 week ago and I exited the trade with a profit. I explained how I managed it. 1 week ago I explained why I could buy it. It fell down sharply. Where did it stop? In fact, on Friday it had a 10.7% down move. That's a huge down move. Where did it stop? Isn't it interesting that it stopped right at the daily trendline support? There is a watermark support some distance below the trendline support. Weekly is looking very bearish. Why did it drop? Its earnings has not come out. The drop on Friday and the entire bearish signal that is seen in the weekly candle is because of Friday's round move. That is because of Delta Airlines earnings disappointment. It stopped right at trendline support. What am I looking for? I'm not going to short now. The recent swing high is very far away. If the trendline support holds, and even better if it comes down to the watermark support or at least goes between the watermark support and trendline support, goes back above the trendline support again, creating a false downside breakout, I'll be happy to buy the stock right at that point because the fundamentals of the stock is still the same. Earnings is of course going to come out. So I will consider a strategy where earnings disappointment will not result in huge loss. What could be such a strategy? Long call vertical or short put vertical could be such a strategy. And I will now wait for a possible bounce setup in this stock. That is technically. I want to show one thing on the Q scorecard that I noticed. And see, that is how I identified peak. I explained exactly how I identified peak this week. I explained exactly how I identified UAL last week. And I am also explaining how I am analyzing UAL now. All my analysis I am sharing before knowing the results. And that is the proof of the value of the system and the technique. The system without the technique is of no use. Now, one thing I'm going to show you on this UAL scorecard and how it changed from 1 week ago when I bought it and closed the trade with a profit. I shared the scorecard 1 week ago in the market recap. Same UAL, undervalued stock, high earnings growth, and 1 week ago my basis of sharing it was that the industry was also very strong. That was a 3-star buying candidate. Profitable company. Notice here, funds neutral, insider neutral, analysts neutral. This is what the scorecard showed 1 week ago. I shared it in the market recap 1 week ago. How has it changed today? And I noticed that change. Remember these colors here at the bottom. Remember the color here. This was very green 1 week ago. The peer bullishness. On Friday with Delta's earnings, a lot of airline stocks came down, so I expect this to be red. What happened? Here is the interesting part. Let's look at the scorecard now. Yes, all the 100% of peer stocks of United Airlines came down on Friday. Valuation doesn't change. Earnings is not out. Earnings growth doesn't change. Earnings is not out. They are remaining the same. What is the change here? Last week, we saw all three were yellow. Now, as price came down by more than 10% on Friday, and all the down move of the week happened on Friday, insiders, in fact, changed from neutral to bullish. Analysts also changed from neutral to bullish. However, earnings is coming soon, 22nd Jan. This is not a time where I'd like to buy the stock outright, but looking at the trend line support in daily, if, and that is a big if, that is how I am getting ready. If it gives a bounce buy setup, I'll be happy to take a long trade, and I'm getting a little bit more confidence on taking the trade looking at the change in color, the score color of insiders bullish or not and analyst bullish or not, that changed bullishly. And notice one thing, while ordinary retail traders may be scared, the people who are in the know, they seem to be accumulating. However, they may accumulate for many reasons. I'm not going to buy just because they are accumulating. I'm going to buy based on a proper trade setup, and I have reasons, as I explained, to wait for a possible buy setup in UAL and trade it on the long side only if that comes, using a strategy that doesn't risk a lot from earnings, that will be short put vertical or long call vertical. Or you may trade for a very short time before earnings using the stocks also. You have to be very alert for possible down moves and keep an eye if other airline stocks are coming out with earnings. So probably using long call vertical, short put vertical is preferred. Stocks may be whipsawed by trading with stock, in this case may be whipsawed by result of other airline stocks. So peak, PEAK, I am holding, and UAL I am keeping an eye on. Why I came back to peak is you saw how I analyzed it. Now you have, if you have the Q Vital system, you may put all your liquid stocks in Vital, create a scorecard, look for stocks like peak, that is high dividend stocks, giving a proper buy setup, and see if their industry is also strong. If so, and in fact there are other stocks, it's not the only stock I bought with high dividend last week. Peak is only one. There are other stocks. I leave it to you to look at them and consider if they are for you to buy or not. We are at 1 hour point. Let's end today's session here. Thanks a lot for attending. Have a great weekend. I look forward to seeing you in my next session. And as this session again shows, as I always say, there is no reason not to trade profitably. I hope you do that. Thank you and see you again.